Technology is in free fall, plummeting 4.5% this week, with the RSI sinking to 53, indicating a bearish trend and regulatory risks looming. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we find ourselves in a relatively calm market environment, with the VIX index at 19.6, indicating normal conditions. As we examine the major sectors, technology is particularly noteworthy, given its significant influence on the broader market. Currently, the technology sector is slightly underperforming the S&P 500, and the sector ETF, QQQ, has experienced a decline of 4.5%. This recent sell-off presents an interesting opportunity to reassess the sector's prospects. Given the technology sector's substantial weight in the market, its performance can have a profound impact on the overall direction of the S&P 500. As such, it is essential for investors to stay informed about the latest developments and trends in this critical sector. This week, we will delve into the key drivers, risks, and opportunities in technology, providing valuable insights for investors looking to navigate this complex landscape. Please remember, this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The technology sector, as represented by the QQQ ETF, is showing signs of weakness, with a weekly decline of 4.5%, however, it's still up 1.34% for the month. The RSI reading of 53 implies that the sector is not overly extended, but the bearish signal suggests that momentum is waning. This reading indicates that the sector is losing some of its upward momentum, which could lead to a period of consolidation. The trend direction is still slightly positive, but conviction is lacking, as the sector is struggling to break through key resistance levels. Key support levels are likely to be tested in the coming days, and a break below these levels could lead to further declines. Conversely, a bounce off these support levels could lead to a retest of resistance, potentially setting up a breakout or a sustained move higher. The current move looks like an extended overreach, and the sector may be due for a pullback. However, the technical setup worth watching this week is the potential for a reversal, as the sector tries to find its footing. The RSI reading and the bearish signal are warning signs that the sector may be due for a correction. Now let us look at the fundamental catalysts driving this sector. The technology sector is expected to be influenced by several key macro drivers this week, including the CPI inflation report and the FOMC rate decision, which could impact the overall growth trajectory of the sector. Given the normal market conditions and a VIX of 19.6, we are seeing a relatively stable environment that could support the sector's performance. The key stocks, such as AAPL, MSFT, NVDA, GOOGL, and Meta, are signaling a mixed bag in terms of sector health, with some stocks showing resilience and others experiencing some pullback. This week, we will be watching for any earnings reports or regulatory news that could move the sector, as well as the macro data that could provide further insights into the sector's fundamentals. The longer-term fundamental thesis for being positioned in the technology sector remains intact, driven by the ongoing trends of digital transformation, artificial intelligence, and semiconductor innovation. These trends are expected to drive growth and profitability for the sector's key players, making it an attractive space for investors. As we navigate the sector this week, it is essential to consider the macro tailwinds and headwinds, including the potential impact of inflation and interest rates on the sector's growth. Next, let us talk about the specific risks you need to manage this week. The technology sector is facing significant risks this week, primarily driven by regulatory concerns, supply chain disruptions, and a potential slowdown in consumer spending. Given the current volatility environment, with the VIX at 19.6, investors should be cautious with position sizing, balancing upside potential with downside protection. Unexpected headwinds, such as geopolitical tensions or unforeseen economic data, could further exacerbate market fluctuations. A disciplined framework for managing downside exposure is crucial, involving careful risk assessment, diversification, and stop-loss strategies. Investors should be prepared to adjust their portfolios accordingly, focusing on quality and resilience in the face of uncertainty. By prioritizing risk management and adaptability, investors can navigate the challenges in the technology sector. And now for the strategic outlook. Where does technology stand heading into next week? Our strategic positioning recommendation for the technology sector this week is cautiously bullish, driven by improving semiconductor sales data, up 7% year over year. Investors should track the cloud computing theme, which continues to gain momentum. This is educational content, not financial advice. For more insights, subscribe to Financial Market Oracle, and comment your technology watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.